Hey folks, Bob Kendall. I just thought I'd bring up the markets. Actually came up a minute ago. A couple of folks joined. I don't see anyone on right now, but I'm just going to go ahead and talk a little bit about the markets today. We're trading 2508 on the S&P, and as I've been talking about in commentary, 2506 was a key number. I said if we hit that, we would actually get to a panic phase. We did actually do that. Let's take a look over at the S&P real quick. Looks like we got a couple watching now. So let's go over, and this is we got a short on the futures about 8-9 days ago at around the 2700 level, and we're still pushing that. We're 2511, and in my opinion, if we close under 2528 today, it's going to be pretty bad for the markets. We may see a rebound. Typically, whatever happens on a Fed day is we'll get a kind of a opposite move the next couple of days after that. So it just depends. If we go out under 2506, then I'm pretty negative as we come into the rest of the week, and we still have GDP to come out. I watched the whole Powell conference and watched everything, and I don't see them backing down, which is good. But as I've said in commentary, is I'm not buying into if the Fed backs off that's good for the stock market. And in fact, they had some dovish comments that they came out with initially, and you saw that big rally in the S&P, and I was actually able to take advantage of that as I was selling into that rally, and it flipped pretty quick. Usually what you do is the first reaction to the Fed, you fade it, whether it's up or down, and then there's usually a trade there. This one ended up to be pretty huge because the S&P was up, the futures were up about 30 handles, and then they inverted and went all the way down about almost 50 down. And we've rebounded. We're 1250 right now on the S&P. So I thought we'd just hang out for 8 minutes or so. And let me see here. Yeah, it looks like we're okay for chat. If you guys have any questions or anything, you want to post a question, I'll look over at the other screen to see if I can answer anything. But the anyway, I'm just kind of distracted here. So this is kind of a casual just hangout. And so please ask a question if you have one. But basically what's happened today, which is interesting, let me go full screen on this chart so you can see this. And what I'm talking about here is you'll see this bar today. We made a new high from yesterday, a new low, which is an outside bar. But typically when an outside reversal happens at a low, at a bottom here, if this happened when we were up at 2,800 or something, we were up at a high of a sequence, it'd be much different. The reversal down, if we close below yesterday's low, is going to be negative, but typically we're going to get some sort of bounce here. Sorry, of course, they decide to tell me about fixing my computer in the middle of a broadcast. But the bottom line is the close here is going to be pretty important, whether we get some short covering coming into the close. I'm going to go over to the WaveTech scalper screen. I had an amazing day trading. I just have been really focused on that all day. So you can see we have this little wedge going up here. But what you'll see here, I can't bring up the liquidity meter. It's got some of my account details on it, so I really can't bring that up. I actually accidentally did a broadcast, so if you saw that, you weren't supposed to. I've already deleted that broadcast. But the bottom line is we're pushing up around 14. The low of the day, I've got to flop over to get to this. The low of the day was 89.50, and we keep doing these couple, maybe a few hours of a rally, and then we'll sell off again. But if we go over once again and look at the what's going on here, you can see, you don't have to see the liquidity meter. You can see there's only 2 and 5 contracts over here, and there's actually more volume than you think. You can see a lot rolling around. It's just that they're rolling around, and it's about 150 point range where we're bouncing around in. So it's going to be interesting this next couple of minutes as we come in. We got about 6 minutes to go. And what typically will happen, this will tell us a lot, because I want to watch this futures market while we go through the close here. And once we get through the close, you'll see a couple things. Is if everybody was short, my guess is this is one of those days, I'm flashing back to my floor days, is where if you look across the pit right now, everybody's just turned green and about ready to vomit at any second. You're not going to see a lot of happy faces, couple guys, but this is, if you could see if you could go in the digital world, see everybody's face that's in front of the E-mini charts right now, it's probably not very happy, and it's people are looking to square up positions probably by the end of the day. Now we're continuing to rally here. You can see futures are moving up. But the bottom line is days like today usually are not good for most of the trading community. There's always some winners, but a lot of folks got beat up today, I suspect. And I should have tweeted. I was just really focused on trading today. It was a pretty important day from my viewpoint, what was available on the screens for me. But the bottom line is, I was looking at this thing this morning. It's like, are these people crazy? Up 1.8% prior to the Fed meeting. It was like everybody had bought into this, and I talked about it in my commentary last night. Is that this thing that says that if the Fed comes in dovish, that's going to be bullish for the market? The answer is no, it's not. And in fact, if they hadn't raised, let's say they took the raise off, Dow Jones would be down 700-800 right now. And the fact is, they are still sticking to their guns. I don't think a lot of folks are believing them at the moment, but they're able to roll these decisions out to March or so, and that is what's really, kind of, I guess market participants are going, okay, yeah, that's good. Talk is cheap. You did the raise, that's good. So we'll give some benefit of the doubt. But the bottom line is that it appears that a lot of metrics are starting to change very quickly, and Powell actually alluded to that without saying it. He was talking about the dynamics of the numbers and that their forecast may not come out and work as good as it did this year. You know, it's sort of like being a MPT or an investor using some sort of pie charts and allocation. It all works when the market's going up. It doesn't work very well at all when the market goes down. My best analogy is, it's like looking at the rear view mirror. It works really good. You can stay straight in the road. Can't see what's in front of you, and if a corner comes, you're doomed. And that's the problem here. So we're kind of stabilized here. This is probably the most stable I've seen the markets for hours, actually. And that is that, we're hanging around just above this 2506 number, and we've got 2.5 minutes to go to the bell. And I'm going to see if I can get the turn the bell on here. So we're looking at a couple things here as far as we come into market. So markets have been down for the last couple hours. So typically, if it's like a hard down day and the machines are driving this thing, I don't think any of the algo traders had a very good day. I think they were running the markets up to the point where we saw some of the when we were making highs, when we were printing much higher, at the 67, 70 level on the S&P. Now we're trading 12s. So when we were there, the machines ran this thing up early in the morning, but they turned the machines off, and then everything came apart. They may have come back in and attempted to play into the sell side. And I don't know if you guys seen the Stanley Druckenmiller, who used to work for Soros, and many years ago, I had a friend that worked at Soros, and actually my old newsletter, the Wave Tech Analyst, they used to get it. The guy's name was Steve, that was there at the time and worked with Stanley and those guys. But the bottom line is, Druckenmiller is talking about how there are no trends. There are clearly trends, there are some dynamics that the HFT guys, high frequency traders, have actually affected the markets, but it's a way to embrace them. And I have found a way in my day trading techniques and things of that sort that can actually address some of the dynamics. Now we're trading 0934. We're in a final minute of trade right now. So we'll see how this thing finishes out. Let's see if we can bring up a clock here. Yeah, we got just a few seconds to go, about 6 seconds to go. See this thing selling off. Here we go, we're done. So markets are done here, and this is going to be the interesting part. We finished. This is so typical. I used to have an old client of mine, and I'd have these numbers for the close, and like today it's like 0640. We close at 0685, and he'd go, well, is that it? Is that enough? Is the sell signal? We're just above it, but wait a minute. So it's a classic number where I have a huge pivot number. We'll see there's a little bit of a runoff for the next minute. We'll see if it's buying or selling. But I believe I saw somebody when I was watching the Powell comments on CNBC, and this guy was talking about how all the pension funds need to buy in. And there's going to be a lot of buying coming in. I'm not sure that's soon. There's a lot of flexibility. They may roll these purchases into 2019. And if you've read or watched, if you haven't watched a video on the channel, there's a video that's 26 minutes and change, long-term outlook for the markets. Watch that. I did it about a month ago. And these patterns that are unfolding are very significant, and they indicate that we're going to continue to go down, possibly, toward around the 2400, maybe 2325 level, and that's probably going to be Q1 type action. And I've talked a lot about this, and I'll let you watch that video because I did a pretty decent job. And once I edited the video and got all the crap out of it, it actually is pretty good and easy to watch to get through all the primary content. But the projections that we have, let me see, I might actually have that. I actually do. Here is actually that chart right here. Let's just talk about this since we had the kind of day that would represent this. So 2483 to 2558 was target of zone 1, and that was to be literally supposed to be happening in 2019 very early. So we hit 2489 today. So we satisfied that zone 1, and the pattern that is likely to unfold once this has been hit, which it has, depending on the next couple of days, we should see a rebound in commentary. If you're one of the VPM subscribers and you're watching this, then there will be commentary on Monday, but there will not be commentary during the week. So we have Monday half a day, so there will be commentary there that will be posted on the website, and then there will be no more commentary. There will not be a Kendall Report live show on Monday, Christmas Eve, or on New Year's Eve the following week. And then I think it's the second, on the 3rd, we'll start back commentary on the 3rd as far as things go. And so then there'll be, I think that's a Thursday, Friday, there's commentary, and then we're back to work in 2019. But if you look at this stuff, so zone 1 has been satisfied. And so we could extend that down to 24. I mentioned this in commentary. 2469 is another number that comes popping out when you start doing some of the relationship, looking at the symmetry of the, can't even talk right now, of some of the patterns that are in there. The symmetry is very, very solid in this range between 89, 69, and 25. There's a lot of cluster of different types of things that come in there. So we're likely to see some sort of bounce out of here. But now the number on the upside is around 2620 is the ceiling. So we're looking at 120 points maybe, and then a retest of these lows, and this thing's going to start stair-stepping down. I had I had a long talk with my brother. Matter of fact, we were watching the Powell stuff together. He's in the commercial real estate and lending business, and we were talking about some of the things that are happening there, just on a whole world. And one of the things that came up is, just how fragile the economy is and how fragile the banking system is. There's a lot of elements. It's sort of like, depending now, I'm trying to think of the best way to put this, but the banks have a different set of rules than you and I do, or corporations have, and what they have to do with some assets and marking to the market. So what appears to be a really liquid banking system may not be that liquid. And once certain things happen, and this really fast drop in yields, it has a mixed effect on balance sheets, depending on how they were positioned coming in to this little snafu, because we went from 320 to 820, 280. I'll get that right. So 320 to 280 on yields, and that changes a lot of pictures. So it won't take much to actually get the banking system in an illiquid situation, even though they're ignoring some pricing. And it's the same thing with the Fed. What are the securities that they're holding? What are they really priced at? Have they appreciated from $4 trillion, but they tell us that's what the balance sheet is, but are they worth $5 trillion, $6 trillion, $7? Are they worth $3 trillion? Are they underwater? We don't know, because it's basically this scaling in. They've been rolling assets in their book. So when they have pay downs, it's like a Ginnie Mae fund, only they're reinvesting all those pay downs. They've been doing that. They stopped doing that about a year ago. So it hasn't been rolling over, but a lot of the maturity level of the portfolio that the Fed's holding, everything is pretty much at those levels where you wonder, what is the valuation? No one really reports on that. And I have seen some numbers where the maturity of that book of business that the Fed's holding, those mortgages, are about 14 years. So if they do nothing, they don't reinvest, 14 years from now, all that stuff will disappear off the balance sheets and it will turn to cash. Now, what do they do with that? I have no idea. But that's what they're hoping for, that they get that opportunity. And, and just going back to some of the things that Powell said, he made a comment about, neutral they've now put in as 2.8. So we're pretty close to it. Some of the members on the board want to go above it. Bottom line is, none of this really matters. What it comes into, my opinion, and I've said this many times on my broadcast, is that I believe that the political interference that we're likely to see shortly after the first of the year could be a real detriment to the markets. And if the Democrats get their wish, they take Trump down and destroy the economy just because they hate Trump, not what's good for the country. And so it's really kind of scary, because if they did achieve what they wanted to achieve, it would not be pretty. As I've said before, I don't give a darn what side of the aisle you're on. If you have a destabilization at the top level of government, that's not good. I don't care what country you're in. And, that needs to not happen. Let's put it that way. But so I'm kind of all over the place because it's kind of random. But yeah, and don't forget, you guys can ask questions. I'm going to stay on for probably another. I'm going to go back over, and we're going to see how the futures are fading a little bit. So we're back at 05. So let's see where we went out at. We went out at 05. So the futures are flat from where we went out at. So we closed at 2506.96, down 39.20 on the S&P, 147 points on the composite, and 351 on the Dow Jones. But this thing is still drifting, which tells me that nobody got caught short. So this action that we've seen is just a kind of a drifting. I remember I have a video, I should post that up on my YouTube channel. It was back, I called it the epic close. And what we saw was a big down day, and what everybody was short, it was pretty obvious. And when the markets closed, the futures ran back up. The fact that we're drifting lower here tells you something about the nature of the positions that were held And that's why I started off talking about, I don't think there's a lot, if this was a trading pit and we could see everybody that was trading, there'd be some pretty long faces, not a lot of smiles around, because people probably got whipsawed during the day and were reacting to some of these movements. And so I did do a private, I watched a lot of trading. I probably have about an hour and a half, 2 hour trading that I recorded today. Not sure what I'm going to do with that, but the action that was there was very hugely illiquid, definitely being run by the Augos and the HFT guys. Wasn't a lot of volume around, and things were moving in 200 and 300 point ranges, just randomly ripping around. And so the fact that it doesn't appear to me, looking at watching as we're coming into the close, it looks like to me that there is this drifting down. There are still people looking to get short this thing, so there's more sellers than there are buyers, just kind of pushing it down. Not a lot. It's 0275 right now, 0250 on the futures. So there, and oddly enough, there's better liquidity right now than there was most of the session, at least on the initial bid and ask. I wish I could bring up the liquidity meter, but I can't get off some of the numbers that are on that. So, but the bottom line is, what we're looking at here is just a drifting, no real drastic action. Typically, like I said, if there's a big down day or up day, if everybody's long or short on the futures and that 15-minute window, everybody's squaring up their trades, and you'll see that opposite side of the bias of the day. We're not seeing that. We're seeing that the day was down and that this thing's drifting lower. We're now 0225. We're 25 bid at 50, and we're 12 by 39. Believe it or not, those are some of the better numbers I've seen for all day, to be honest with you. And we didn't see this. This is much better liquidity than what we've seen 2 hours ago. There was virtually nothing. There were air pockets where the markets were moving 10 and 12 handles, 1,200 S&P points in minutes. They were just, and they were random. So anyway, we got about 4 more minutes to go. I'm going to put you on full screen here for a second. All right, I'm back. I was absolutely dehydrated. Sorry about that. Anyway, questions, anyone? Have any thoughts on anything? I would just, like I said, I'm just hanging here watching the futures close and just see how this thing plays out. But it looks like to me this is pretty stable, actually. So I'm impressed with this, although we're stable at the lows. And by the way, I pointed this out in commentary. The high at 29.40 and change was on September 21st, and we have went from there all the way to today's low, 24.89, which was a new low for the year, not just for the week, not for the month, but for the year. So we've seen from September 21st till today's price at 24.89.50. That is the entire range of the year in the last quarter. So, and we saw, the year started off pretty tough. We ground up in this pattern, and then what we've seen next here is the absolute opposite, where we just seen a collapse in prices shortly after making a new high, all-time new high. I had targets of around 30.05.12 as a target. We got to 29.40. There was a number I had back at that time of 29.67, I think 67.40 or something like that. I could look it up, but that number did not get hit. We fell short of it, and we haven't seen those numbers since. And we're, from those highs, it was 412 yesterday. You have to add on today's range today, under 30. So we're looking at another 50, like 462, 65 handles since September 21st. So anyway, we're coming into close. We're in the final minute right now. And we're, like I said, pretty stable, although we're stable near the low of the last hour or so. Let me just bring this up here, the final. Let's go to a 5-minute graph. I did some crazy trading today, but so you can see some of the trading I was doing. This is going back to noon. Let's go and use a 15-minute graph. There we go. Now you can see that there's the big reversal on the news. So you had a range from 25.90. Let's see what that is. 25.90 all the way down to 25.93.25. The low was 25.33.75. I remember the day when it used to take go 60 handles on S&P, if on a good market, it'd be 3 or 4 weeks. We did that in 15 minutes. So pretty crazy volatility. I don't see this stuff going away. There's a lot of work to be done. I was talking to one of our advisors this morning, and we were talking about all the work that's crazy just trying to close out your business for year end. There's just a lot of crud out there, and everybody's slammed right now. So there's not a lot of time off to do things, and especially in market participants and maybe the pensions I mentioned earlier. Maybe the pension do need to buy in, but it doesn't look like Santa Claus and Rudolph crashed and burned today. I can't imagine if there's a rally back, and they try to call any rally back a Santa Claus rally would be laughable. We're going to see. So as we come into the holiday, here's the other thing that's going to happen. I would think tomorrow is your very last real day for this week. People will be bailing out for a long weekend on Friday. Monday will be a very thin affair for sure. Then we'll be back to work on Wednesday again, and then a short week, and then followed by another long weekend. And I think you think the markets have been illiquid now. They're probably going to be really illiquid as we come into the last 2 weeks of the year, as it always is. But there's a lot of things that still need to be done. And so we're not really seeing, we're going to see a lot of activity. And with this market selling off, into the air quotes, this is supposedly one of the best months of the year. Oops. Not so much. And, I see, and I will call them out, I have no, but, something like LPL's research are terrible. All these guys do is try to figure out what the average is for every month. I mean, it's not research. I mean, they're just, well, normally this is what happens in December. This is what happens there. Nobody says this is a really bad market. Things have turned, and you need to be really going into protection mode. Now, you guys have been hanging around us. No, we've been in protection mode for several months now. So, several months, since not too long after the September highs, we started seeing massive selling in our database. We went from about 52% long in early September to 9% long in, by end of October. So we've been setting in cash a lot. And as I've said many times, our database is actually set up for a catastrophic type scenario, and it keeps playing out. Every time you think we're supposed to get a bounce, you're not. The title, I think, day before yesterday, my commentary is, why won't stocks rally? And the reason why is we've entered into a wave 3 down, and you can see where this is the E-mini futures that are on the screen here. And go full screen. These have, you can see this acceleration is happening. We got a little uptick in the PPM1 today, but it's minus 0.76, and the PPM2 is minus 0.43, PPM3 minus 0.23, and I talked about this a fair amount. A lot of folks talk about being above or below the 200-day moving average. Well, the 200-day moving average is accelerating to the most negative level it has been for some time. And what it's doing is it's sloping downward. And that value right now for that 200-day is 2766. And it's dropping every day. Let's see what that decline is here. About 3 handles per day on the 200-day moving average. So every day that comes down, what I said, we were 2769. So it's going to keep going down. So ultimately, as days and weeks go by, somewhere around 2650, where we saw the high just a couple of days ago at 2670, that's going to be the top end of this pattern here. And if you see that, then you're going to want to sell it. And hopefully, if you're a VPM subscriber, you've done everything right. You're in cash, and conversations with your clients are fun things to have right now because you've protected them. So anyway, I think that's going to complete it. I don't see any questions. Those of you who are watching, I appreciate you watching. Please make sure you subscribe to the channel if you haven't already. And I shall. I'll probably pop up. If these things get crazy, I'm going to be around all next week and for the rest of this week. So I may just do some random broadcasts like this and just do fireside talks, we'll call it. Anyway, have a great day. We'll talk to you soon.